Well, good afternoon, everybody, and welcome to our end-of-day market review for October 18th, 2011. My name is Jason Waugh. I'm one of the trainers and success coaches here at Diligence Works, and I'll be walking you through today's presentation. What I'm going to do now is just quickly get into our agenda so we can see just what we're going to be covering. You're going to see that we've got a few things to cover. Though it looks like we've got a lot here, we should be able to get through the entire material in less than 15 minutes. What we're going to be starting off with is a look at the daily news. What we're going to be doing here is just trying to see what influenced the markets and caused them to do what they've done. We're going to be looking at the market outlook, which is going to include analysis on the S&P 500, where we'll be looking for our support and resistance levels. We'll be looking at our volatility indicator to identify whether or not the markets are at a stable trading situation or if we're still looking at volatile conditions like we have for an extended period of time already. Last time I looked, there was not anything on our current watch list, though that's very possible to change within the next 10 minutes or so, so we'll take a look at that as well. There was nothing that showed up on our previous picks list yesterday, so we're going to be fast forwarding through that, but we are going to finish by preparing for tomorrow. And that just means that we're going to take everything that we've looked at, re-summarize it, and decide together whether or not we're in advantageous trading conditions or if we should be best sitting on the sidelines. Now, I do have a quick update on our website transfer. As you guys may or may not be aware, we are transferring over to a new location. You guys are very familiar with the My Wealth Accelerator, and you guys should also be becoming familiar with the new Customer Hub or Ideal Trading Lifestyle website. Everybody's been given usernames and passwords for this new location, but just so you guys are all aware, charting is in the process of being moved over, if not already, on all of your guys' accounts, so you should be able to now launch your charting from there. And the transfer of the watch list is in the process of being moved over as well. We can expect to see the watch list completely transferred over and usable by the end of this week, if not sooner. So with that said, we can go ahead and carry on with our presentation, but we definitely encourage you guys to continue to keep your heads in there and taking a look at our Customer Hub website, because it is going to be the location where we'll be doing all of our work from. All right. So first off, let's go ahead and look at the daily news. What we're going to be doing here is identifying where the futures were prior to market open and what the news was like. And it actually looked like the markets were opening or planning on opening on a negative note. There was a lot of concern with economic reports, but more importantly with earnings releases. Many of the major bellwethers were having a poor time meeting expectations, and as a result driving the markets down. As we can see though, as I'm just about to bring up with Yahoo Finance, the stocks ended up growing and moving into positive territory by the end of the day. And this was due to the fact that, what do we have here? We've got Germany and France have agreed to boost a rescue fund as part of an effort to stem the European debt crisis. So more good news in Europe was the contributing factor for pushing the markets back up into positive territory. Though we do need to be aware that earnings is not necessarily going as favored as many people would like it to be. Though it is still the early stages of earnings, it's very possible that that could change. However, we are dealing with that advice right now as well. So let's go ahead and continue on with our presentation here. Next up, we have our market sentiment. Now, what we'll be doing with this is we'll be identifying whether or not the markets are ideal to trade in from a technical standpoint. And the way that we'll do this is by looking at the S&P 500, where we'll be looking for support and resistance levels, as well as the current location of the MACD. Now, I've drawn a very simplistic couple of lines here, and we should all be very familiar with this one line that we've drawn here below August and September, because it's been a consistent level of support throughout. However, we've modified a resistance line here because we're starting to see that there is some resistance at this point. And in the past, this line looked like this. And that's fair. That line can still exist. However, this new line coincides with one point of candle contact. It coincides with the wick over here, and now over these two candle bodies over here, which is suggesting that this 1225, 1230 mark is resistance. And what we'd really like to see now is another follow-through day, just one more good day where we can break beyond this level of resistance and push ourselves to higher levels. So this is the big line in the sand right now that we need to be aware of. Let's go ahead and look at the MACD. As we can see, the MACD has rolled over again, and it is now rising bullish. Yesterday it was declining bullish, but we had mentioned that because it was such a small little dip in the big scheme of things, we would probably treat it more like a flat bullish, and just as well, because here it is rising again back into positive territory. All right, we're now going to go ahead and we're going to look at our volatility indicator. Now this indicator is a very black and white indicator. It's either above 30 or it's below 30. And if we ever see that it's above 30, we need to treat the markets with some caution, because the markets as a whole are considered volatile. So right now 31.56 is clearly above 30. This means that we're going to continue to trade with caution and be aware of the fact that for the most part, people are trading off of emotion and fear and greed. They're not necessarily trading through sound trading decisions or proper technical or fundamental analysis. Any bit of good news can just push the markets into a good strong rally, while any bad news can push the markets down into a decline or to a downward spiral. This all said, we can see that there's been a lot of strength being discovered over the last couple of weeks. Even yesterday, with the poor day that we had and the poor opening that we were supposed to have today, we can see that we're still managing to slowly push the markets up just a little bit higher each time. So all in all, there is some more stability being discovered, but the markets are still just a little bit too volatile to be trading with full aggression. All right, moving on here. All right, taking a look at the current watch list. Let me just double check to see if anything has popped up since last time I looked. And yep, we've got two stocks. So we're going to go ahead and look at these. TUR. And I'm just going to quickly get rid of my EMAs and my Bollinger Bands. All right, so I can see right off the bat that we have some overhead resistance. Let me go ahead and draw this line for you. Right there. In fact, I would even say that this stock is ranging, which just means it's trading sideways. Definitely one of the more difficult times to trade. Definitely not an advisable trading condition for our basic customers. For our advanced customers, trading in these types of situations should be done with extreme caution, because it's more or less flipping a coin. Half the time it's up, half the time it's down. PBCT. All right, so at first glance, this is looking a little bit better in that it's not ranging. We can see that it's broken through a point of resistance here. We can see that it's got some good long-term support, as well as some shorter-term support. MACD is rising, volume is increasing. Right now, from a strictly technical standpoint, this is looking a lot nicer than our previous pick. The only kicker is it does have a cycle high. I'm going to use the wick, and you can see that it's pretty much finding resistance at that same point of its previous cycle high. So we're going to leave this one as a big iffy trade. Our basic customers will probably want to steer clear of this one. Our advanced customers might do a little bit more investigating into it, and they might be, let me just see what this guy closed at, actually. So it closed at 12.25 versus 12.30 today. Yeah, for advanced customers, if they look at this and they see that tomorrow morning futures and news is all positive, this one has a potential of performing. But again, there is that resistance. It's definitely within that 1%. Definitely not an ideal trade. Now, obviously, we still need to look at news and earnings as well. All right, chugging along. All right, so there's nothing on our previous watch list. So we're going to fast forward past this, and we're going to go ahead and prepare for tomorrow. So in closing, what do we have? We've got market conditions which are bullish. We've got market conditions which are starting to gain more momentum, albeit small smidgens of momentum at a time. However, we are up against overhead resistance at 12.30, so we should be cautious and aware of the fact that the S&P has had difficulties breaking through this point. There's no statutory holidays tomorrow or for the rest of the week, so we're free and clear there. Tomorrow morning, we're going to want to take a look at any reports, anything that is listed in the news where people are either optimistic or pessimistic towards the potential release of a report or an announcement from a higher being. We do have a volatility indicator which is above 30, which means markets are still volatile. It's getting so close to 30 that the indicator might dance above and below that indicator for the next couple of weeks. We don't really know for certain, but we do know that it seems like it's slowly gaining more strength. And then finally, because the markets are as volatile as they are, we need to be very aware of the pre-market news and futures. Today was a good day. We really wouldn't have necessarily taken advantage of it, though, because opening news and futures were both negative. So in the same token, tomorrow, if we have any negativity at market open, we're going to steer clear, stay away from the markets, and see what happens throughout the rest of the day. If we have another day of growth, very good chance that that indicator is going to be back down below 30. Very good chance that we'll have broken through some resistance with our S&P 500 and be looking at some further growth. So with that said, this has been the end of day market review. Have yourself a good rest of your trading day, and expect to see this presentation archived and on Customer Hub within the next couple of hours. Talk to you guys later. Bye-bye.